Google's most senior AI scientist just walked out the door and took 3 of the company's top researchers with him: Jeff Dean, Sanjay Ghemawat, Oriol Vinyals, Quoc. The engineers behind Google Brain, TensorFlow, sequence-to-sequence learning, and some of the most cited AI research in history. All gone. August 5th. One day, Google's response was not a retention counteroffer. It was a term sheet. On the same day, Google reported 82% cloud revenue growth, their best quarter since 2021. And Demis Hassabis, the Nobel Prize winner who built DeepMind, stepped aside as CEO to become chairman. Best AI quarter in 3 years. 4 of its most important researchers departing simultaneously. AI CEO stepping back. Investment in the company the departing talent just created. These look like contradictions. They are not. This is a strategy. And it is the same strategy Microsoft used to turn a $13 billion OpenAI investment into a hedge that now prints money on both sides of the AI war. To understand why this is deliberate, you need to understand the setup, because the history makes the trap obvious. 2014, Google acquires DeepMind for $500 million. Hassabis stays as CEO. AlphaGo, AlphaFold, Nobel Prize in Chemistry. DeepMind becomes the most scientifically credentialed AI lab in the world. 2023, Google merges Google Brain, Jeff Dean's unit, with DeepMind into Google DeepMind. Stated reason: eliminate internal competition, accelerate Gemini. Unstated consequence: 2 radically different research cultures, 1 org chart, 1 CEO. Dean had run Google Brain as an autonomous research organization since 2011. After the merger, he became chief scientist, senior title, no unit to run. Hassabis was CEO. The environment Dean built was gone. August 2026. Hassabis steps back. Dean leaves. Google funds the new company. Looks like disorganization. Reads as a controlled exit. Here's why. Let's start with the number that matters most: 82%. Google Cloud's revenue growth in Q2 2026. Not AI revenue. Total cloud revenue, driven by TPU Ironwood, Google's purpose-built AI inference chip, deployed at scale across their data centers. AWS grew at 18%. Azure grew at 34%. Google Cloud grew at 82%. The gap between Google and every other cloud provider has never been wider. Google owns the full stack: chip, framework, cloud, enterprise relationships, and increasingly the models running on all of it. When Alphabet's earnings call mentioned enterprise customers migrating workloads to Google Cloud specifically for TPU access, the subtext is unmistakable. Google isn't competing on model quality. It's competing on inference cost and speed. And it's winning by a distance. This context makes the Jeff Dean departure legible. Google's competitive position is its chip and its cloud, not its research headcount. The infrastructure moat is structural. The research talent is valuable but replaceable. These are different assets, and Google is optimizing them differently. Microsoft's insight, the one that turned Azure into the margin collector for the entire AI war, is that the model is the product, but the infrastructure is the business. Google had that insight before any of them. TPU Ironwood at 82%. Growth is the proof. And what it means for every company betting on OpenAI or Anthropic is something most analysts haven't priced in yet. If understanding which layer of the AI stack captures durable margin is the kind of insight you want before the market prices it in, subscribe. We break this down every Tuesday and Friday. Jeff Dean left because the thing he built was gone. Google Brain was a research organization, not a product organization, not an engineering organization. A pure research environment where PhDs could spend years on problems with no commercial application and no shipping deadline. That culture produced TensorFlow, transformer architectures, and some of the most cited AI papers in history. After the 2023 merger with DeepMind, that changed. The combined organization was larger, better funded, and more commercially focused. Hassabis' DeepMind ran differently: tighter product timelines, clearer deliverables, a culture built around solving specific scientific problems rather than open-ended research. For Dean, the creative environment he'd spent 11 years building had been restructured into something different. Not worse, different. DeepMind's track record speaks for itself, but different in ways that made staying less attractive for someone whose contribution model was built around autonomous research leadership. Sources close to the departure told Bloomberg that Dean's new company will focus on fundamental AI research, specifically long-horizon problems that don't fit into commercial product timelines. Exactly the work he was doing at Google Brain before the merger. And here's where it gets interesting. Google is investing in that new company. Why would Google fund research it could do internally? Because it can't. Not anymore. Not with the merged organization structure and commercial timelines. The research that Google Brain used to produce, the kind that pays off over 5 to 10 years, doesn't fit inside a product-driven org chart. The investment in Dean's new company is Google buying the option on that research without restructuring itself. That is the same logic as Microsoft investing in the team that just left OpenAI. Fund the talent externally. On the upside, don't absorb the culture conflict. Demis Hassabis stepping aside as CEO is being reported as a secondary story. It is the primary story, and it comes bundled with the most important personnel move Google didn't announce loudly. Hassabis built DeepMind into the most scientifically credentialed AI lab in history. AlphaFold 2 predicted 200 million protein structures. The entire field had solved 200,000 in 50 years. Nobel Prize in Chemistry 2024. The Nobel Committee called it one of the most important scientific discoveries ever. What he didn't accomplish, making Gemini the default enterprise AI choice. GPT, 5.6 Sol, and Claude Sonnet remain the preference for most enterprise frontier reasoning tasks. Gemini leads in long context analysis, multimodal tasks, and Google Workspace integration, but not in the general enterprise conversations where OpenAI and Anthropic dominate. Closing that gap requires product management discipline, customer success infrastructure, quarterly roadmap accountability. Not the same skills that produce Nobel Prizes. Hassabis' greatest contribution was scientific. The next phase requires different leadership, which is why the appointment that matters is Quoc, Kavachoglu moving up to run the Gemini product roadmap day-to-day. Kavachoglu was one of the original DeepMind researchers. He's been there since before the Google acquisition. He's not a product executive parachuted in from outside. He's the person who knows the research deeply enough to translate it into shipping cadence. The restructuring splits the functions. Hassabis handles external relationships, scientific direction, and long-horizon research strategy. Kavachoglu runs the product. Both get leadership optimized for their actual job, not one person carrying both mandates. That is not disorganization. That is a mature company correcting a structural mistake it made 3 years ago. And the enterprise customers watching Gemini's product cadence will notice the change by Q1 2027. If this pattern sounds familiar, it should. Microsoft invested $13 billion in OpenAI. OpenAI stayed the dominant model provider. Microsoft became the dominant distribution layer. When OpenAI started generating revenue, Microsoft got a cut. When OpenAI's containment failures raised enterprise concerns, Microsoft had Anthropic as a hedge. When frontier model costs got too high, Microsoft built MAI to route around them. Microsoft structured itself so that every possible outcome in the OpenAI versus Anthropic versus open source competition generates revenue for Microsoft. Not because of the models, because of Azure. Google is now executing a more sophisticated version of the same strategy. Google has its own models, Gemini, its own chips, TPU Ironwood, its own cloud, which just grew at 82%, its own research organization, DeepMind, and now, through the Dean investment and earlier investments in companies like Mistral and Cohere, it has financial stakes in external AI labs competing with its own models. Google owns the infrastructure layer even more completely than Microsoft does. Azure runs on NVIDIA. Google Cloud runs on TPUs Google designed and built. When the AI inference market shifts from training to inference, as the Anthropic AMD deal this week confirmed it is Google's custom Silicon Advantage compounds. The Jeff Dean investment adds one more dimension, a stake in the fundamental research that produces the next generation of breakthroughs. Not because Google needs the breakthroughs to come from outside, because it needs those breakthroughs to land on Google Cloud when they're ready to scale. Let's name the outcomes clearly. Google wins regardless of which model company wins the frontier AI race. TPU Ironwood powers inference for any model on Google Cloud. If OpenAI wins, it runs on Google Cloud. If Anthropic wins, they signed $30 billion of Azure commits, but their AMD partnership routes inference through multiple providers. If open source wins, those models run on cloud infrastructure. Google's cloud is the floor underneath every scenario. Dean's new company wins with direct access to Google TPU infrastructure, research talent, and distribution relationships from day one. Better starting position than almost any independent AI research startup can claim. Enterprise customers win from the Gemini product leadership separation. A product-focused Gemini roadmap means faster enterprise feature delivery, better SLA structures, more predictable release cadence. The scientific credibility Hassabis built stays in the organization, pointed at long-horizon research rather than quarterly product milestones. Who loses? OpenAI's distribution advantage. For 3 years, the OpenAI-Microsoft partnership was the path of least resistance for enterprise AI adoption. Azure, Copilot, OpenAI models, one vendor relationship for the whole stack. Google's 82% cloud growth is being driven by enterprise customers actively choosing to route around that path. Not because Gemini is better, because TPU Ironwood inference is cheaper. Cost beats capability once capability is good enough, and in most enterprise workloads, it already is. Anthropic's independence narrative. They've positioned themselves as the independent, safety-focused alternative to both Microsoft-backed OpenAI and Google-backed models. But they're spending $30 billion on Azure. They took $5 billion from Google, and their AMD deal runs AMD chips backed by NVIDIA's investor portfolio. Every infrastructure deal Anthropic signs makes the independent positioning harder to sustain. And every AI lab that doesn't own its infrastructure layer. Google's 82% cloud growth on TPU infrastructure is the most recent confirmation that infrastructure compounds. Models commoditize. The lab that doesn't own the layer its models run on is permanently at the margin of someone else's business. Google's best quarter in 3 years. Its most decorated AI scientist departing. Its AI CEO stepping back. Its investment in the company its departing talent just built. These aren't contradictions. They're the same strategy executed at different layers of the same machine. Google built the infrastructure that makes frontier AI commercially viable. They built the chips. They built the cloud. They built the research organization that produced AlphaFold. Now they're restructuring the research organization to separate scientific ambition from product delivery, and investing in external labs to preserve access to the frontier research that product-focused organizations can't do on quarterly timelines. Jeff Dean didn't leave Google. Jeff Dean is Google's option on the next AlphaFold, held outside the org chart. Demis Hassabis isn't stepping down. He's being deployed where his specific capability creates more value. External relationships, scientific credibility, long-horizon strategy. And Google Cloud is growing at 82% because none of this requires their models to win. It requires their infrastructure to be the platform every model runs on. Microsoft called this the house always wins strategy. Google is running the same play with better chips and a 20-year head start on infrastructure. If you want to understand which companies are structuring themselves as the house and which ones are gambling on being the winning model, we break down those economics every week. Subscribe and tell me in the comments, does Google's separation of research and product leadership make Gemini more or less competitive against OpenAI in 2027?